I'm sitting here today with Charles Hoskinson. Now, Charles is the CEO of Input Output Hong Kong, or IOHK. They're working on a project called Cardano, which is just launching at the moment, and I'm here to find out exactly what it's about. So, Charles, your background is, of course, you were CEO of Ethereum. You were one of the founders there. And how did that lead to Cardano and what you're doing today?
That's a good question. And first, thank you for having me on. It's
No worries.
kind of a little gloomy day here in Japan, but I love Tokyo Tech, so it's fun to be here. My history in the cryptocurrency space is a little varied. My first company actually was Invictus Innovations. Nobody knows the name of that, but they knew the product we built, which is BitShares.
Yeah.
And the goal with BitShares was to build a value-stable currency and to explore decentralized exchange, which is kind of vogue now, but at the time everybody was like, well, why do you need to do that? Right?
Yeah.
And what happened was while we were building these things, we discovered that it was really, really hard to do anything with a cryptocurrency. Like anytime you wanted to upgrade it or add something to it, you ran into like this huge wave of things you had to think about, and even small changes were complicated. So with Ethereum, we said, well, why can't we attach a programming language to a blockchain? So you can deploy all kinds of custom dApps as easily as one would with JavaScript in the browser or something like that. So that was really the first second generation blockchain, and it was enormously successful. The problem is the market's grown to a point where now it's no longer in proof of concept land. Is something possible?
Yeah.
We've gotten to a point where we now really have to start thinking about how do we grow to 1 billion users? How do we actually get these systems to talk to legacy financial systems? How do we make them sustainable? For example, we have a very big governance crisis right now in the cryptocurrency space where you have Bitcoin and Bitcoin Cash. Maybe we'll have another one soon. We have Ethereum and Ethereum Classic. Maybe we'll have another one soon. So that's really not sustainable infrastructure if it keeps forking and splitting every time people have disagreements. So the Cardano project is really a reevaluation of all the lessons that I've learned in the last few years of being in the space, and a desire to build the first third generation cryptocurrency. So what does that mean?
Third generation.
Third generation. So what does that mean? Well, the first generation was about, can we build a decentralized money and actually pull off sending value to people and actually have that be worth something? That was Bitcoin. The second generation is that those transactions we sent have stories. So we brought smart contracts in to tell those stories. And the third generation is really all about scalability, interoperability, and sustainability, and doing this in a way that is long-lasting, meaning that it's not just something we build and it's a great experiment, but something that actually turns into useful infrastructure that can be used by millions to billions of people.
So Cardano has a series of layers, right?
Yeah.
That's different to Ethereum.
Yeah, so Ethereum value and computation are interconnected. And that was a really nice thing to do from a proof of concept, but the problem is that computation is very bespoke. So the things that you would want to do are very different from me. And if we all are sharing a digital commons, the issue there is that resources become very constrained. So the price of computation just keeps going up no matter what you do. And so you can think about maybe clever ways of sharding or getting things off chain. We still have this fundamental problem that these things are bundled. The other issue is that computation is intrinsically more complicated, and it's intrinsically more risky than just sending a transaction. When Alice sends a transaction to Bob, there's this story behind that. Bitcoin miners and other people, they can kind of get away from the consequences of this, if it's to buy drugs or launder money or whatever it is, by saying, oh, well, I didn't know the story. I'm just, I'm neutral, I just process transactions. When you're actually running the computation, if you're running the infrastructure for the next Silk Road, or you're running the infrastructure for an assassination market, you actually know you're doing that. You see, so that's a very different situation.
Right.
And so as a consequence of there being a story behind computation, in our view, for scalability as well as liability reasons, it's good to separate these two things and have them run in different layers of a system. The flexibility you get from that separation is also you can have different computational models. There's the Ethereum virtual machine as it is right now, but what happens when they move to WebAssembly, for example? So can you run these things in parallel? Does that mean you've now broken half your network? What happens if you want to run computation in the Java virtual machine, for example, or maybe the LLVM or something like that? So if you can actually separate them, not only can you move liability and cost to a different part of your system, but now you can entertain the ideas of having multiple systems run in parallel, which is what's best for people. And they can kind of decide what they want to pay, what risk they want to encumber, whether that layer is going to be regulated or not. And that's kind of the differentiator between a second generation and a third generation blockchain. One gives you more flexibility.
I see, yeah. I've noticed the focus on governance just from reading the materials. And are you going to, like, is IOHK going to regulate in any way who uses the system?
No, it's an open infrastructure. So you have systems where whatever the government wants, they get. Those are systems like Ripple, because they're regulated entities. They have venture capital investment, and they've built a great product. But at the end of the day, their customers are people who have to have a good relationship with the Treasury Department and other people, right? So if they say, hey, you have to put attribution in, it's going to end up being put into the system, right? Then you have other systems like Zcash where it's quite the opposite, where they say, hey, guys, we don't really care who says what where. We're just going to do it this way. And I think what we can aspire to is to have a third option where we live in the middle. So you keep some basic principles like civil asset forfeiture should never happen. You should always have access to your money. You should have a certain level of privacy within the system, at least equivalent to what Bitcoin offers. But at the same time, you have to understand that when you do business with certain people, you've moved from just you to now a group. And that group has every right to say there's terms and conditions and rules. For example, if I create an account on a Bitstamp has every right to tell me what the terms and conditions of that business relationship are because they're providing me a service and it's a contract between the two. So the question is, how do we automate these types of things and create special domains so that when you do business with people, it can be done with the benefit of both parties? So what does that mean in practice? It means that maybe certain types of transactions have metadata in them. Maybe certain types of transactions are signed with an identity system. Maybe certain types of transactions occur within trusted hardware, so it actually allows you to do unforgeable geotagging, so you know what location the person's in. But this is always like an extra layer. It's a value add, but it's not built into the core system, which is always maintaining Bitcoin's principles, which is open, transparent, and distributed, so nobody is in charge of forcing you to use these types of things.
I see, right, yeah. Okay, so the next thing I want to ask you is, what are you doing here in Japan? I know since the beginning, this project is focused to a fairly large degree on Japan.
Yeah.
And you're concentrating a lot of the native token sale on Japanese customers or
right.
Japanese investors. Is that right?
So it's always important to understand who's involved. So Cardano is a big project. There are 3 entities involved. There's Emergo, Cardano Foundation, and IOHK. So the foundation is kind of like the governing body. They hold the trademark. They're responsible for community management, standards, these types of things. Emergo is a Japanese company. The easiest way of explaining them is kind of like Cardano's version of consensus. So as we build out our ecosystem, they're going to really be pushing dApps and other types of things. Mm-hmm. They're based in both Osaka and Japan. And IOHK is the protocol developer. We've been retained until 2020. And our job is to figure out the science and the engineering and actually maintain this protocol as it grows and evolves. We have an office in Japan. We actually have a Japanese division, IOJP. It's in Osaka. And my co-founder actually lives in Osaka. He's been here for 10 years, and he's married to a Japanese woman and has children. So we have very strong roots in Japan. And actually, Japan is, in my view, probably the best crypto market in all of Asia. A lot of people, they originally said, you need to focus on China. And I said, well, to me, China is like a red herring. It's a big market, and there's a lot of money in the market, but the government's not exactly in a position where I feel they're going to embrace crypto in a friendly way.
You get that feeling.
Yeah. Well, it's obvious now, but 2 years ago, everybody said, "Oh, well, it's unregulated, it's a big market." I said, "Well, the minute they figure out that this market evades capital controls, I think we're probably going to see harsh regulation." Whereas contrast that with Japan, where the FSA has actually been very intelligent. Had a bad event, Mt. Gox. Instead of saying, "Oh, we're going to shut everything down and throw everybody in jail," they said, "We're going to create kind of a hybrid regulatory model where if you're going to do a money service business and do something that's traditionally regulated activity, they're going to control that very tightly, but in a very smart way. But at the same time, they're using an SRO model like the JCBA and the JBA to really start helping the community businesses figure out how to regulate themselves. So it's almost like taking the best of Switzerland and the best of what you would see in a market like New York and put it together. Combine that with the enormous trading volume, combine that with the amazing human capital we see here, combine that with the traditional role that Tokyo has had in the Forex markets, where trillions of dollars are exchanged all the time, every day here. It's a great place to be. It really is. As for the sale ended in January 2017. If people are curious about it, they can go to cardanohub.org. There's a great transparency section. Sale was one of the first to ever do compliance, so we actually know how many people participated. when you see like there's 14,000 transactions, you're like, well, how many are real people there, right?
Yeah.
Well, we know it's 9,912 because they had to show passports and other things.
So you KYC'd everyone.
Every single person.
In your crowd sale.
Yeah, every single person was KYC through a dedicated firm in Japan, and the foundation actually audited the KYC standards that were held and verified that they were adhered to. And when there was a deficiency, made sure that they were corrected or a refund given. So it was tough, and it was a very stressful process. IOHK actually built the compliance software for it, and we have like 348 pages of documentation and other things, and I think we already publicly released that. But it was a unique sale to do, and it brought a lot of new people into the space, and we think the community is quite strong. But it also gave us the ability to have a more direct relationship with the community. For example, right now we're running a help desk tour. We've gone to 6 different cities. We're just showing people how to install a wallet, redeem their ADA, use an exchange safely, and so forth. Basic things that we in the cryptocurrency community have come to know and love and understand. But if somebody's new to crypto, there's a very high probability they're going to get it wrong. Well, we got it wrong. Bitcoin was $1. So the stakes were very low, but now stuff is really valuable and so forth. So it's really important people understand how to back up their wallet, people understand how to safely use exchange and so forth. So we've been running around all Japan and doing that, and because we know the customers, we actually can invite them to come to these events.
So you're dealing with a lot of investors who probably never invested in crypto before.
Well, it's a mix. Some have, some haven't bought cryptocurrencies. It's a mix. And the reality is we're seeing a humongous wave of cryptocurrency purchasing, especially over the last year in Japan. The markets here are larger now than the markets ever were in China, and they kind of get that this is going to be the next big thing. The problem is that most of the good materials about cryptocurrencies are in English. So there's actually a big translation and competency gap in Japan. So it's really hard for people to kind of sort out what's good, what's bad, and so forth. So we're trying to build relationships with people and make sure that there's good customer service, good flows of information. For example, our white paper is in 5 different languages, and the first language we really tried to push for was to get it out in native Japanese, and our roadmap will also be in Japanese and so forth.
Right.
Yeah.
And so you got a pretty good response to all that. Before you did the crowd sale, who was actually backing the project? Who funded it?
Yeah, so there was a group of people in Osaka who wanted to do a Japanese take on Ethereum. There was kind of like China has Neo and the Western world has Ethereum.
Japanese version of Ethereum.
So they wanted Japanese Ethereum, and they also wanted it to be a bit more friendly with banks and regulated institutions. And so they said, well, can we put all this together? And so they said, we'll hire you guys as a consultant to kind of figure out how to do these things. And so we spent a good few months trying to figure out like what that actually looked like. And then eventually they turned into Amerco, which is the third entity in the space.
I see, right.
And we took the development contract, and then we made sure that there was an independent neutral entity. So there's a foundation in Switzerland. And they were established originally and actually in Isle of Man, because right when we had set all this up, Isle of Man had proposed new regulations for cryptocurrency foundations.
Did they change that?
Well, they have it now, and the only problem was that they were kind of punching above their weight. So while they had a good regulatory structure, it was impossible to do basic things like professional services and get a bank account. So that foundation moved to Switzerland, and now they're a member of the Crypto Valley Association. They work with MME partners.
It's kind of funny how this is all moving back to Switzerland.
I know, right? No matter how many, it's like The Godfather. No matter how many times you try to get out, they keep pulling you back in. But Switzerland's a great area, and so they basically act as the neutral party. For example, they act as an auditor of us. So when we write software every month, we have to submit stuff to them, and they look at the code and so forth. They also make sure that when we write white papers, those white papers go through peer review. And they've grown from just a few people to I think around 15 now, and they plan to grow to maybe 20, 25, and so forth. Still a lot of work to do in the Japanese community. I would prefer for the foundation to grow into Japan and create a community management group here and get meetup groups set up and so forth, and also join the JCBA and these things. But that's kind of like little details you have to take care of.
It sounds like a pretty lengthy process. Actually.
It is, and nothing in Japan is easy or short.
Yeah, I know.
It's very bureaucratic, but that's fun. Japan has its charm.
Yep, certainly does. And you mentioned the native token, which is ADA.
Yeah.
Spelled A-D-A.
Yeah, after Ada Lovelace.
Of course.
Yeah, the first programmer, and actually she was good friends with Babbage, and she was Lord Byron's daughter. Wonderful gal. Yeah, the native token is ADA. In terms of technology, Cardano is a proof-of-stake based system. We created a new proof-of-stake protocol called Ouroboros. It's the first proofably secure protocol. Part of it was designed here at Tokyo Tech by Bernardo David. And basically, what we did is we brought some of the top cryptographers in the world together, and we said, all right, well, here's what Next has done, and here's what Tendermint has done, and all these heuristic notions of proof-of-stake. And the first question we asked is proof-of-stake actually secure or not? Because there was a big debate in the cryptocurrency community. We actually didn't even know. So we had to build a security model, and we ended up showing that proof-of-stake, under reasonable assumptions, is actually secure. Then the next question is, how do we then build a practical cryptocurrency from this type of a system, which took quite a bit of engineering prowess. And we've gone through 6 iterations, and Ouroboros is the first proof-of-stake protocol to be shown at Crypto 17, which is one of the top cryptography conferences in the world. But why did we choose it? Where are we going? If you actually look at the operational cost of Bitcoin, it costs about $360,000 an hour at the current price point. It's subject to change. The higher Bitcoin goes, the more expensive it is to run. And actually, most of that is consumed in power because these are competitive markets. So we said it's just not sustainable to build, world currency with billions of users if your cost of running this thing is in the billions of dollars every year to eventually the tens of billions of dollars. So we wanted a system that was very cheap to run. The other thing we wanted to do is explore a system that was easy to shard and a system that's easy to run multiple chains at the same time. So sharding in that you can have parallel transaction execution. So when Alice sends her transaction to Bob and Jane sends her transaction to Eve, these can actually be run at the same time on different domains. And then multiple chains where you can have Cardano and then maybe a computation layer and another computation layer, maybe even another cryptocurrency like Ethereum Classic. You could actually run all the consensus for that in the same setting. And because it's a proof-of-stake based system, the cost to do 4 chains is, outside of the data and the network resources, the same as doing one. Right? So that was kind of our initial goal. And so we're about 1 year into 3 years worth of research for it. We've gotten to a point where we could launch a cryptocurrency and put it in the market. And we're really excited, especially as we get into 2018 and 2019, where we can turn on those sharding capabilities and those multi-chain staking capabilities, and we really get a lot of scalability and a lot of interoperability with other chains. But that's not the only thing. The other side of ADA is that it's a computational token like Ethereum. Ether was always advertised as oil. It's like fuel for a giant engine. So you have to build a good engine. And the problem with the way Ethereum works is that you have this virtual machine, which is kind of well designed, but not really. And then every single time you want to program in a language for it, you have to build a compiler. And it has to compile to that virtual machine. Well, if you make any change to the virtual machine, it breaks all the compilers, right? So that means necessarily you're kind of restricted to a small core group of well-supported languages. So what we did is said, could we come up with a new way of handling this where we could look at it in an abstraction where a computer could auto-build these things for us. So we found a great framework. It's called the K framework. It was created by Grigori Roshu out of University of Illinois. The long and short is using K in semantics-based compilation, what you're able to do is write the semantics of a programming language in K, define your virtual machine in K, and then the computer will do the translation for you. You don't have to build the compiler for that. And if you ever change your virtual machine, you just write new K semantics, but you don't have to maintain the compilers. And it's really easy to write K semantics for a language. It only takes a few weeks to a few months. And we're investing heavily in the framework, so it should even be faster. So our hope is to support hundreds of programming languages. When we open up our smart contract layer, we're going to already have Java, C, JavaScript, Solidity, and a new language we've created called Plutus, ready to go at launch. Plutus, yeah, which is a kind of our version of smart contract Haskell. We're big Haskell fans here. But our hope is very shortly thereafter to add mainstream languages like Python and Ruby and other such things. So we can tell the developer, listen, write smart contracts in the languages you know, you love, you're comfortable with. Don't worry so much about Solidity or any of these other things. There's no reason to do that. The other thing that we've brought with our model is a platform called Daedalus. So the big issue I have with dApps is asking the developer to abandon all the good stuff. Microsoft, Google, and Facebook, they've invested billions of dollars into React and Angular and these great platforms and billions of dollars into Chrome and Node and these types of things. So you have a great paradigm. And as a development paradigm, it's only getting better, more mature. The tooling is getting significantly more involved. I mean, Microsoft deployed Office as a web application. This is their bread and butter desktop application, and now it's running in the browser. So it's telling you that that paradigm's here to stay, and as a developer, you're probably going to master that tool set. So to me, it's extremely important that when we are acquiring developers, to let them live in a web stack model. And when they want and need to use smart contracts, think of that like in a service-oriented architecture or a microservice architecture where you call it as a service. And you write it in the languages you care to write it in. So Daedalus gives us the ability to do that because it's built actually directly on top of Chrome and Node. It's using a platform called Electron.
Right.
So over time, our wallet's going to open up, and it's going to be more than just a wallet for Ada. It's going to have an app store. It's going to have an IDE built into it. All the semantics-based compilation stuff is there. And so the developer, the user, the app maker, they all live in the same ecosystem, and that's a web stack-oriented ecosystem where you add just a little extra to get the capabilities of our platform.
Okay, yeah.
Right.
I downloaded that Daedalus just yesterday.
Oh, what did you think of it? Are you a Mac user or a Windows user?
Mac user.
Okay, pretty cool. Did it work for you?
It worked for me.
Okay.
Is that surprising?
Well, we're on the help desk tour, so right now all we're dealing with is bugs and things like that.
Oh,
so we've
okay,
got a
well,
very grim view of things.
I gotta say, I'm not a power user yet, but I've just played around with the wallet to
Okay, yeah, we
see
try
basic functionality.
Yeah, and actually we try to keep as much of that wallet as simple as possible because a lot of our community is kind of new to crypto. So we try to make it easy to redeem ADA in the wallet, really easy to back up and so forth. There's a lot of little subtle things, like we were the first to do an HD wallet in ED25519. It's a new elliptic curve, well, an older elliptic curve, but it's the first time an elliptic curve, that curve has been used for an HD wallet, which at the time seemed like a great idea, but it caused an entire month of engineering delays to get it done. But there's like a lot of little stuff like that, and over time we're going to add a paper wallet generator and multi-sig support. And our hope is next year to be adding new signature schemes for Bitcoin interoperability as well as for quantum resistance.
Right.
So we're really excited about adding either Bliss or dilithium, which is a lattice-based signature, and quantum computers can't break that. So that's going to be pretty cool, and people can decide whether they want to use transactions that are quantum resistant or not. We're also exploring more sophisticated cryptographic primitives and bringing them in the wallet, like multi-party computation and so forth. In fact, all of our multi-party computation research is done here in Tokyo, which is pretty cool.
Is it?
Yeah, Bernardo David and Mario Larangera are doing that work.
Very interesting.
Yeah.
So how much of all this is up and running now?
So right now the wallet's running, the network's running. The cryptocurrency launched publicly on the 29th, but we actually launched it on the 22nd. Just to get over one epic rollover, just to make sure that everything was stable. Trading started in early October on Bittrex.
Right.
Yeah, and it's doing pretty well. I think we're above 500 million or 600 million, but I don't check the price very often. Good volume. And basically it's like a functional cryptocurrency. And what we're going to be doing is just adding more capabilities every few months. And we'll have a major release in late quarter one, early quarter two of 2018 called Shelly, where we're going to actually start opening up the computation layer so you can run smart contracts and also fully unlocking our entire consensus algorithm. For example, right now we're stake locked to a federation of groups. Amergo, CF, and IOHK are running the network. And then we're going to open up delegation and staking and other things in a few months as people actually learn how to use Daedalus and understand what's going on. It's a new protocol, new software, so it takes a little bit of training wheels to get everything.
Maybe by then I'll understand what's going on.
Yeah, there we go. Well, we tried hard to write everything down. There's two major sources of documentation. One is by Cardano. It's in 5 different languages. It's about 42 pages long or something, but it explains kind of the philosophy.
It's all pretty clear, I have to say.
Yeah, and then the other is Cardano Docs, which is for technical integration and so forth. And we're updating it right now because we realized that our documentation wasn't quite where it needed to be after talking to Bittrex. Right. It's always amazing how you think you've written everything down right, but then when you give it to an enterprise user and they have to integrate your thing, how that thing starts, how it unravels very quickly. You're like, oh, yeah, right, I should probably write that down. Right? So the documentation continues to evolve and grow, but at the end of the day, it's just answering the same questions over and over again, right? And so you have to build FAQs and community management and maintain the Slack. In terms of community growth, it's been tremendously impressive. We're at 3,500 people on the Slack. Our Facebook group has over 3,000. And the Reddit has a lot of activity for like a completely new cryptocurrency in the space.
This is for just Cardano.
Just for Cardano. Just Cardano, the Cardano community Slack. We still have a lot of those MyEther wallet bots floating around.
Oh, yeah, they're everywhere.
Yeah, they're everywhere. You can't get rid of those guys. They're like the modern day herpes of cryptocurrency. But we'll get rid of them somehow, some way. But overall, we're very impressed with the community metrics, considering it's just like so new, and we haven't even done our official launch event yet. We're planning on doing that tomorrow on the 14th. So the roadmap is going to come out at the end of the month, and It's going to kind of give, at least until the end of 2018, view of the project, both on the computation layer as well as the settlement layer. And then I expect we'll get a big wave of questions, and then we'll try to answer those questions in a way where they're archived and people can get more information.
Excellent. Well, I think that's probably a pretty solid introduction to the whole thing. If anyone's made it this far, where can they go to find out more?
Yeah, so the primary website that we're trying to make the big community site to be the hub for everything is cardanohub.org.
Cardanohub.org.
It has links to all of the technical documentation. It also has a lot of transparency information about the sale, Genesis block distribution. And because we did compliance, we actually know a lot about our buyers, from age range to average purchase amount and so forth. Like, you can't actually compute the Gini coefficient, for example, of Ethereum. Because you don't know if Bob bought $1 million worth of Ether or over 12 transactions, or if it was just a single transaction, whereas you can do that.
Some say that's an advantage.
Well, to a certain extent, but it's also important to know who the whales are, like, who can cause disruptions in the market and these types of things. The other thing is that it allows you to do things like consumer protection. For example, when ADA vouchers were being vended to people, everybody who went through vending had the option of signing up for a recovery service or not. So they got a certificate, and if they signed up for the recovery service, it encrypted the certificate, sent the decryption key to one archive and the encrypted certificate to another archive, and you just go through compliance again, and for some period of time, I think it's 12 or 24 months, you can just get the encrypted certificate and the key mailed to you from the two different archives. You can't do that with like Ethereum or something, because Bob can say, hey, I bought Ether, but I lost access to my email, and you don't know. There's no way of verifying that. But because you have a KYC profile, you can do those types of things.
I've seen it happen many times.
Yeah, and actually I think that's the trend. If you look at Identity Mind, for example, they've just launched a product for doing KYC for crowd sales, and there's a lot of chatter in the regulation circles about, well, if we're going to allow crowd sales to exist, that's one of the pillars that has to be done is AML KYC, because it's just too much money aggregating. The other thing is the banking partners are getting more worried. If you're an entity that's done a crowd sale, you have all this money, you deposit it in your bank account, and your bank is like, where'd you get all this money from? And you say, well, people over the internet. And they're like, who? I don't know. I don't know where these guys are at. It's like their compliance officer would go insane with these types of things. So I think that
sounds like a familiar story.
Well, not for us, but we've heard it certainly a lot from some people floating around. We're actually one of the few companies in Hong Kong, I think, that has a U.S. bank account. So because we're pretty good at these things, but for a lot of the younger kids who this is their first business and the first time they've done it, it's certainly a big issue and a big concern. So we tried very hard to be as fair and open and transparent, but there's always issues here and there, and you deal with them on a case by case basis.
Sure.
Yeah.
All right then. This is Charles Hoskinson, CEO of IOHK IOHK.
Thank you.
.io.
.io, you got it, yeah.
Talking about the Cardano project.
Thank you, John, so much. It's a pleasure to be here, and it's a pleasure to be on the show.
Okay, over and out.